Okay, good. All right. So last time, as I was saying, we focused a little bit more on incorporation because there's really two steps in this process. You have to usually have to create the nonprofit corporation, the entity that's going to be doing all the work and everything, and then you get it tax exempt by a number of different means that we can do that. And that's what we're going to focus on a little more today is the tax exemption, but we're going to recap from last time too. So no worries if you missed the first one, of course. Today is the session, as we were saying, we're going to do a little recap about how to create your corporation, your nonprofit corporation, and what are the rules that such nonprofits have to follow. Yes. And then we'll talk a little bit about what to do after you get incorporated. You know, the first board meeting, the things you have to do, the filings, bylaws, things like that. And then we're going to talk about which tax exempt application will work for you. There's two kinds. There's actually sort of three kinds if you think of sponsorship too. So we'll cover all of the ways you could get tax exempt. And then, as I said, we'll either have some coaching appointments afterward, immediately afterward, if people are ready to go, or we'll set up appointments with you to do the individual work with you on that. Now, just know that there is a Google Drive here that actually I'll put that in the chat real quick. This is a Google Drive link that has lots of materials that are going to help you do your tax exempt nonprofit, things like bylaws, things like sample meeting minutes, sample applications. Um, what else? Yeah, just all kinds of good stuff. Here's the Google Drive, and it also has the recordings of the sessions and the PowerPoints from the sessions too. Okay. All right, so we want you to get all filled up with resources here as we go forward. Let's get started. Let me do the screen share part. Okay, we got that. We got that. We got this. That's good. Oh, we got more person coming in. If you're just coming in, we're just getting started, and just know that we're going through the PowerPoint that we have here, but I just put in the chat. Actually, I'm not sure if the person who just got in gets the chat. Let's maybe redo. One of you guys, could you send Teresa? Could you put the resource in there again for person who just came in? Those are resource materials that'll help you go forward and create your nonprofit and get tax exemption. So. All right, well, let's
Thank you.
get started. Yeah, thank you. Um, all right, so here's that agenda again for today. Going to do a little recap now. Actually, Ellen, would you take us through a little bit of a recap?
Sure. So the first thing we're going to go over are the four guiding principles of a 501c3 charitable organization that's tax exempt. So in order for a nonprofit to be recognized by the IRS and by the state as a nonprofit that's tax exempt, they have to live by these four really core principles. And they have to live by these rules, right? You can't just set up and change down the road. Once you start as a nonprofit that's tax exempt and get recognized and get that recognition, that tax exempt status, these guiding principles will have to remain in the organization down the road. And here are the four guiding principles. Number one is that they have to have a core mission, a core mission that is recognized by the IRS as an exempt purpose. In the following slide, we're going to go over some examples of those purposes, but charitable purposes here include things like education, helping out the poor, religious, scientific missions. Those ones are easily recognized as charitable. And does that mean that the organization can only do things related to that mission? No, the organization can engage in a certain degree of non-related activities. For example, UC Berkeley is a public institution that's a charitable organization, that's a nonprofit that engages in education, right? The institution teaches students, obviously, but it also does some side business like operating a bookstore that sells key rings, mugs, t-shirts. So selling those merchandise isn't related exclusively to the educational purpose of the institution, but
Mhm.
that's okay. As long as that the percentage or the revenue generated from those non-related activities is insubstantial, about 15%, if I remember correctly,
Yep.
then that's okay. So again, number one, you have to have a mission that is recognized as charitable,
Hmm.
but you can also do certain non-related, non-charitable purposes or activities, but that has to be minimal.
Right.
The second one is no private benefit. That means unlike a Delaware C corporation where you can raise revenue and share the revenue among its members or shareholders for profit, for tax-exempt nonprofits, you can't do that. It is possible for you to pay people who work for your nonprofit a reasonable salary, but you
Mhm.
can't raise donations and money and just pay them out as dividends to its members. That's not allowed.
Right.
So no private benefit is the second guiding principle. The
Hmm.
third one is assets are permanently dedicated to exempt purposes. This means that as soon as, let's say, a private asset, let's say someone's donation that's coming from someone's personal savings account, as long as that is received by a nonprofit, then it is permanently a public asset, right? It can't go back. It's really difficult for it to go back to the private realm.
Hmm.
So if you take in assets or donations as a nonprofit, you have to make sure that those assets and money that you receive remain inside the public realm, and that those assets are used for public purposes or the charitable purposes that we talked about with the first guiding principle.
Yeah, and Alan, when a nonprofit, then a tax-exempt nonprofit closes down, what does it
Yeah.
do with the assets?
So you can't just close down a nonprofit and take the money with you.
Mhm.
A really popular option is to, when you're closing down a nonprofit, you can transfer those assets to other nonprofits in your area that
Mhm.
have similar missions as your own nonprofit. So again, you can't just slide those out. Just by closing the nonprofit doesn't mean you can take away the money back. It has to remain in the public space, so you can
Mhm.
transfer them over to other nonprofits. That's an option.
That's right. All right, and the fourth one, go ahead.
Yeah, finally, no advocacy for or against a candidate or legislation. That's a short way of putting saying that is no lobbying.
Mhm.
So political activity is really restricted for 501(c)(3) organizations. For 501(c)(4) organizations, lobbying is a little bit more, it's allowed to a greater degree. But here for these organizations, you can use public money to back a candidate or to raise support for a specific piece of legislation. But I would say it may be allowed to do things like promoting greater civic engagement, like
Mhm.
educating people about the system,
Mhm.
encouraging them to, I don't know, participate in the political process. Maybe that's allowed,
Yeah.
but going above and beyond that and
Mhm.
backing a specific candidate is not allowed.
Right. You could do things like voter registration. You could do
Mhm.
some public education about issues. So, for example, the Sierra Club can talk about, the importance of the environment and in its speeches and in, articles that it writes for newspapers or things like that. But they can't, take a stand against a particular candidate or for a particular piece of legislation. They actually created a separate lobbying arm using the 501(c)(4) status for that one that allows them to do a little bit more lobbying. So we're going to tell you about both kinds of organizations, primarily focusing on the 501(c)(3), which has these four rules, but the 501(c)(4) allows you a little bit more on the lobbying side. Yeah, good job, Alan. And then what are these purposes here? What do we got here?
Yeah, so these are some of the examples of charitable purposes that are recognized.
Hmm.
Just to name a few, provide relief to the poor, advancing religion, to promote education. From what I've observed over the years, I think education is one of the core missions that clients bring into the clinic. They want to raise awareness about a subject, they want to educate people on a certain thing that's easily recognized, and you can, yeah, it's a established charitable mission that you can select for your nonprofit to get the tax exempt recognition. Uh,
Yeah. Yep, and all of these things. So what you might be asking yourself as you're looking at this list here is, what are the things that I want to do with this with my nonprofit? Which of the categories here would I plug into? And it may be more than one for sure.
Right.
And it also may be possible that you could start with one and then add another as you go along. It's just these are the purposes that are set forth in 26 USC 501(c)(3. That's the statute. And what is distinctive about the 501(c)(3) organizations is that they can give tax deductions for
Mhm.
donations. Okay. If you did a 501(c)(4), which is the that more lobbying able organization, you would be tax exempt just like a 501(c)(3, but you could not give a tax deduction for a donation. That's why when you get something from the Democratic Party or the Republican Party, it always says thanks for your donation. They don't have to pay tax on it, but you can't deduct it, you see. All right, good. Well, so once you identify the purpose that you want to do, you put it in. Oh, well, here, I'm sorry. We were about to talk about the corporation. Let's mention a little bit more about the C4s, if you don't mind. Go ahead.
Yeah, so we talked about C4 organizations a little bit. The key differences are one, more lobbying is allowed
Mhm,
by this type of organization. But the key disadvantage here is that donor donations are not tax deductible. So
mhm,
you have to really think about, well, do I want the organization to engage in more lobbying, but are you willing to accept the consequence that donations that flow through your organization won't be able to provide tax deduction to donors? There's a key distinction there. Um, but for the most part, people, uh, I, from what I had observed, most people end up choosing 501(c)(3) organizations for the benefit of being giving tax deductions to donors and yeah, following their charitable missions.
and then they might form another organization, which would be
Right.
501(c)(4), like the Sierra Club's done. Yeah, yeah.
Yeah.
Good, good. Okay, so once you choose which way you want to go, what about this forming the corporation? How do you do that?
Yeah, so you have to prepare a piece of document called Articles of Incorporation. Nothing too complicated there. We have a template you can follow. The only sort of real addition or change that you have to make to the Articles of Incorporation is naming your core mission, your charitable mission. You have to be specific about it. You can't just say, "I want to help the poor." You have to be a little bit more detailed. You have to say things like, "Oh, we're gonna engage in these activities and pursue these things in order to bring about this change, to pursue this goal. The more detailed, the better. You don't have to like write an essay about it, but you have to make it detailed enough for the IRS person who is reading it to be convinced that, okay, this person is going to engage in XYZ activities in order to bring about XYZ results that are charitable.
Mhm,
So we do have on the resource Google Drive that we shared earlier, we do have an example that you can follow, the Friends Emergent School example,
mhm,
that gives you an idea about how you should frame your charitable mission language
mhm.
for it to be acceptable.
Right. And it's only $30, very cheap to do this. You could put this in tonight, and in about 2 weeks, you should receive your articles approved by the Secretary of State. Now, one thing you should know is that when you go to the BizFile online website, you're not going to be you're not going to be filling in an entire document with all of the four promises. You see, it's got to have all these four promises that we mentioned and who's your agent for service of process and all that sort of stuff on there. No, what they're going to do is screen by screen build this document for you. So they'll start by saying, yeah, what's your name? Okay, you type that one in. Okay, what's your contact for service of process? You put that in there. And then it's going to ask a little bit about your activities. We always say that it's a good idea to upload a more complete description of your activities. That just helps the IRS determine, oh, clearly this organization needs, tax exemption. Just like what Alan was saying, you wouldn't be saying, "Oh, we're just going to help the poor." Yeah, you got to have a little bit more in there. We're going to do a soup kitchen. We're going to do a clothing drive, something like that. And then at the end, you sign it and then you pay your $30. And then when it comes to you, printed out and everything and approved by the IRS, that's where it's going to look a little bit like this. It's going to have all the four promises in it. It's going to have all the information you provided. And then you'll be ready to go to get tax exemption. See? So, as I said, let's if you have questions, go ahead and put those in the chat. We'll cover those in just a few minutes. Let's go to our next one. Oh, yeah. So now what would you do? What do you guys got to think about doing once you have become incorporated? Yeah, go ahead. I think Jen was going to cover this, right?
Yeah. So the next slide, we have a checklist of what we should do after we form the nonprofit.
Mhm.
So first, the incorporator has the power to name the first board. The
Mhm.
requirement is two minimum board members, but we recommend three just to avoid the deadlock in voting. And the incorporator can also do a couple more things like approve the bylaws and appoint officers, like what roles they will take. But everything else will need a board meeting. And to name a few, this include hiring employees, set up bank accounts, purchasing commercial liability insurances, and then also approve additional filings. And we're all very busy, so sometimes it can be hard to get a board meeting, especially let's say if you have 12 board members, you will need at least six of them to get a quorum.
Mhm.
And there's a way to help. So in the bylaws, we can include something called board action without a meeting.
Mhm.
And then having this provision will allow directors to take action without physically or virtually holding a meeting, as
Mhm.
long as all the directors agree in writing. So the writing can be a signed document, email, or an electronic signatures.
Mhm.
And we also have a sample bylaws for a first meeting agenda handout for your reference in the Google Drive we shared in the chat.
Great, great. And then there's a few extra filings to think about. Usually want to get commercial liability insurance that will cover any damage that the organization might, cause in some fashion there. We'll go over these filings a little bit more later, but none of the filings are very expensive. I think the biggest expense is just the Attorney General's filing is $25. So yeah, we are really talking about $30 for forming the corporation and maybe another $100 worth to complete all your filings. But otherwise, it's a relatively cheap incorporation process. The place where it gets a little bit more pricey is when you get to tax exemption. You see. So yeah, so Jen, let's see. Next thing, what do we got? Oh yes, the filings. Maybe you could say a little bit more about the filings here.
Yeah, so here's a list of important filings that we often remind our clients to complete
Mhm.
after incorporations.
Mhm.
For example, federal EIN number,
Mhm.
notice of intent to operate under Section 501(c)(4, and
If you're doing 501(c)(4. Yeah.
yeah, the tax filing form for IRS, federal tax return, state tax return,
Mhm.
California State of Information, and the registration with California Attorney General's Office Charity Bureau. And I
Mhm.
think we also recommend filing with county and city after you
Mhm.
get incorporated.
Right, right. The county is actually optional these days.
Okay.
We have that, but the city, yeah, you normally let the city know, and they give you a business license. But usually, it's fairly cheap if you're a nonprofit. So, yeah. Okay, and what about these tax returns? Oh, well, here you go, Jen. You wouldn't have to file if you didn't make any money at all, right?
That's not right. So
Right.
I think the biggest takeaway from this slide is you will need to do the tax returns even if you didn't make any money.
Right.
Yeah. And
Absolutely.
then it's due by May the 15th after the end of the fiscal year. You
Hmm.
will just fill out the corresponding form based on your income bracket. So for the federal filings, the forms are called 990N or 990EZ. It depends on your nonprofit income and assets. And same idea for the state tax filing. The forms are 199N or 199, depending on your income and assets. But you will always need to do the tax returns.
Yes, absolutely. And by the way, if you are in the top one here, their income was no greater than 50K. They really mean it. It's like a postcard, meaning you just check a box. It says, did you make more than 50K? Nope. And then you're pretty much done. It's fairly easy to do. You don't have to worry about accounting or anything like that. An accountant reviewing it or something like that. Now, of course, if you are making more income than 50K, you probably should have some bookkeeper looking at it. So. Okay, well, let me tell you a little bit about bylaws. Thank you, Jen. That was great. Bylaws, you should know that it's kind of like the owner's manual for your nonprofit corporation. It'll have a few things in it that, are pretty straightforward. What's your purposes? What's your name? Do you have an office? It has a few of the promises in it that you talked about. Yeah, we're not going to be doing anything partisan. We're going to dedicate our assets to nonprofit purposes forever. Those sorts of things that you have to promise the IRS to get tax exemption and all of that. Here's a couple more things to think about, though. Membership. Membership is an important part because when they say members in state law, what they mean is people who can vote for the board of directors, meaning they elect the board of directors. That would be what would be called a member nonprofit. If your membership is simply people who are getting your newsletter and you let them know about events and stuff like that, but they don't vote for the board, that would be called a non-member nonprofit. And I would say probably half of the nonprofits are member and half are non-member. Why would you do members? Well, again, look at the Sierra Club. They've got a huge membership. AAA has a huge membership, right? And so anytime they need to like mobilize, somebody to, well, again, they can't do partisan stuff, but to say we represent, 100,000 members or something, it sounds really big and important. Um, the difficulty is that you always then have to keep up with the membership. You have to organize them into an annual meeting where they can vote your board members onto the board. So it's a little bit more cumbersome to have members who vote for the board. Otherwise, if you didn't want to do that, the board would just replenish itself. So somebody steps off the board, the rest of the board members just, vote the next person in, you see. Okay. Let me see. So, and by the way, you have to say in your bylaws whether you're a member or a non-member organization. And if you're a non-member, you would simply say, hey, we might use the word member to refer to a stakeholder in our organization, but they don't get to vote for the board. Okay. That's what you'd want to clarify in the bylaws there. And as I said, we have a sample set of bylaws you can easily adopt there. Now, you might say to yourself, well, can I just get a thing of bylaws off of the web or something? Well, I think you probably want to use ours because there are two things in the bylaws that the IRS requires. Okay. And so they really want to see these two things in there. They might hold up your tax exemption if they look at your bylaws and you don't have these two things in there. One thing is a conflict of interest policy. Okay. How the conflict of interest policy works is to basically check whenever a board member is involved with a transaction with the organization. Give you an example. Our nonprofit needs an office space. Ooh, and I happen to own an office building. Okay. Well, I could, if I wanted to, say to the board, hey, I know of a space we could probably get. I think I could probably get a good rate for us on this one. And then hide my interest in it myself. That's not what you're supposed to do. Conflict of interest means you tell the board of your interest in a transaction with the board. You say, it's my office building, and here's how I would rent it to you. And then you have to recuse yourself. You can't vote for it if it's, if you have a personal interest in it. And so then the board has to decide, okay, is this fair and just and reasonable for us, not thinking about at all that it's my space, okay? My interest doesn't even enter into it, of course. And finally, they have to write it down because this is an important thing that the IRS will check on, and that is if you've had any transactions with board members, they want to see that you handled it with this conflict of interest here policy. Okay, that's one of two things that our bylaws do that the IRS wants to see. Second thing is this one up at the top here, committees. Committees, the IRS wants to make sure that anybody paid a salary by the organization is using community standard wages. So, and what do I mean? I mean average in the community. So if you were in, let's say, Fresno area, you were doing a nonprofit, you would have to do a little research for, okay, well, what do we want to hire a director. What would be an average director salary for a nonprofit in Fresno? You could probably find this out through salary.com or Indeed or something like that. But that's got to be your limit in terms of hiring somebody there. And they want to make sure that this is being done. So they ask for a standing compensation committee. Okay, so that then when you're hiring, the compensation committee does this research, finds out the average salary, recommends it to the board approves it before the person is hired. Okay, that's what they want to see. Okay. Now, there is one other rule that's in our bylaws, but it's also more of a state law thing. And that is, remember we said that you could have as few as two board members. Okay, that's fine. One person could be the president, the other could be the secretary treasurer. The president can't be the secretary or the treasurer. Okay, under state law. But there is another little guideline that you have to pay attention to. It's called the 49% rule. And what that means is that no more than 49% of your board or, a minority of your board can be interested. What do I mean by interested? Paid compensation or related to each other. Okay. So if my sister and I wanted to be on the board, and then let's say Alan also joined the board, and we were going to pay Alan as a board member, that means that three of our board members are interested. That would mean that the least board members we could have would be seven, right? Because it can only be a minority of that board, right? Okay, so that's in our bylaws too. All right, so again, I would say don't look around on the web for it. Make sure that you get all the right components in it. Use the one in our resource drive that we just gave you. Okay. Okay, let's see. Now we're going to talk a little bit about how to get that tax exempt status. Okay, here we go. Teresa, I think you were going to cover this, right?
Yeah,
All right.
of course. So now there are a couple of options for obtaining the tax exempt status. Um, One of the options is setting up a fiscal sponsorship arrangements with another organization that already has exempt status. So those would be some of your local larger nonprofits. Some of them do it fairly regularly.
Mhm.
Uh, but what will happen is they will usually take a small fee for, doing this for you. I'll talk about it a tiny bit more.
Mhm.
Second option is going through the process yourself and obtaining your own tax exempt status.
Right. Now, there is this little thing you got to make sure, and that is if you do want to go fiscal sponsorship, which is a way a number of nonprofits start, they go and be a program of the local United Way or something like that, another organization that has tax exemption, that's fine. But the most important thing on that is don't form your corporation if you're going to do fiscal sponsorship. Why is that, Teresa?
That's a good question, Bill. In
Hmm.
California, every corporation that nonprofit corporation or profit corporation that does not have its own ex tax exempt status will need to be paying 800 years of franchise tax beginning their second year of existence. So if you were to incorporate your nonprofit corporation in California this year, starting next year, you will need to start paying the 800 dollar per year franchise tax, unless you file for your own tax exemption
Right.
uh, with the IRS and then with the state of California.
So I think you already gave us a little sense of how the sponsorship works. Yeah, go ahead and maybe give us a little more on that one, if you would.
Yeah, so many organizations, instead of going through the process of uh, filing for their own tax exempt status, they instead organize with another organization that has their tax exempt status. This might be because they're, you know, it's well, right now not really, but in the fall might have been because it was right before the holidays. They would have been worried that they are not going to obtain their tax exempt status right in time, but that they
Mhm.
wanted to start of their activities, in time for the holidays and
Mhm.
already do some activities. In that
Mhm.
case, or it could be because there is a grant coming up and
Mhm.
uh, they simply do not have the time to go with their own tax exempt status before they can obtain the grant. So their option
Mhm.
is to go through this route. Uh, the nonprofit doesn't even have to be incorporated,
Mhm.
but it does need to align with the sponsor's exempt purpose. So whatever you're using the grant money for or the sponsorship for, uh, it needs to be the same as the tax exempt purpose of the organization that you're affiliating yourself with.
Right.
And there also needs to be a written fiscal sponsorship agreement,
Mhm.
where, as I mentioned, there will be normally a fee based on the revenues. So
Mhm.
usually they take around 8 to 10% of
Mhm.
what your money is. In practice, as I said, the non-exempt nonprofit, so that would be you,
Mhm.
arranges a grant,
Mhm.
and then the grantor or donor pays the money to the sponsor, so the organization who does have the tax exempt status on your behalf, and
Mhm.
then if the non-exempt if it would further the sponsor's purposes, then the sponsor grants the money uh, to back to you.
Mhm.
Uh, but they do have a discretion to not accept a grant or,
Mhm.
you know, not grant the not pass the grant on to you,
Mhm.
um, because they cannot be just counted. They do all have their own activities as well that they need to keep funding.
Yeah. Now,
And
the sponsor, I was just going to say the sponsor arrangement, like United Way, for example, that's a broad-based tax exempt organization, can probably embrace, everything from Little League to dog shelter or if they want to do. They may also provide some helpful services to the budding nonprofit, would have like accounting or human resources or things like that they can help the organization get started that way. Also, their reputation. I mean, United Way is a good reputation in the community, and they may not know your organization because you just started. So, bringing yourself under their wing can also, give you a little more credibility at the beginning. So,
it could be also used for nonprofits that are interested in doing activities that are very seasonal again. So if
oh,
you're
that's a good
doing
point.
something either just for the holidays or
Mm-hmm.
something maybe twice per year, then there
Mm-hmm.
is not really a need to have a full nonprofit organization and you can just
Mm-hmm.
go this way instead.
Yeah, very good point. Very good point. All right, well, let's tell them now about tax exempt applications. Okay, so if you've decided you're not going to do that sponsorship thing, there's really two forms that you can file. Okay, so there's one called the 1023EZ, and then there's the full form 1023. So tell us about this EZ one.
All right, so as the name suggests, the 1023 Easy is the easier option to file. It's the more streamlined version of the 1023 form. Uh, but how to determine whether you can file that one or whether you need to file the full 1023 form is through the following questions. So, if you answer yes to any of these questions, unfortunately, you cannot use the short form and you will need to use the full form. That's
Mhm.
simply because if you answer yes, the IRS will want to have slightly bit more information on your activities and
Mhm.
on where your revenue is coming from. So the questions are whether you estimate that your annual gross income will exceed the average of $50,000 dollars per year over the next 3 years, whether in case you're already established corporation, your annual gross receipt has exceeded 50,000 in any of the past 3 years, and whether you have total assets that the fair market value of which exceeds $250,000.
Right. Now, Teresa, if somebody isn't really sure, I mean, because you may not be sure whether you're going to get 50K over the next 3 years or not. And I suppose another way to think of it is, will you get more than 150K for over the next 3 years? I suppose is the best way to think about it, because you could go up, you could go down, that sort of thing. What would we tend to tell people if they're sort of not sure?
So if you're not sure, because again, these are just your best guess estimates. For this form, they are not asking to provide any financials or budgeting. So in this case, if you think that is more likely than not that you will make less, then go ahead and still file the 1023 easy. If
Mm-hmm.
you make more than that, it's okay. What you will need to do at that point is file the full form and pay the difference in the fee. So the fee for this shorter, more streamlined version is 275, and as you will discover later, the fee for the full form is $600.
Mm-hmm.
So if you file first the 1023 easy, and later your nonprofit is very successful, picks up, you're making way more than you anticipated, then you can just file the full form and pay the difference in the fees for filing those forms.
Right. Yep, yep.
And there is no penalty or anything
No, no.
for doing so. So
Right. So there are a few other exclusions. Certain organizations can't do the 1023 easy. We don't have to go through them all, but I guess pull out a few of the more salient
yeah,
ones
so
if you would.
for example, if you're, a limited liability company or you're operating or formed in foreign country, if you're forming a hospital, school, or church, and if your previous status has been revoked, those are some things, as I said, uh, it's not something bad. It's just that the IRS will want a bit more information on your
Hmm.
operations, on your organization, um, and to ensure that you're using your organization for what you're supposed to be using it for, and not just as a money conduit.
Hmm. Good, good. Okay, well, now maybe we should tell them a little bit about the full form 1023. Yes, if you can't do the 1023
Yeah,
easy.
yeah, of course. So for the full 1023, as I mentioned, the fee here is slightly higher. Previously, it has been $275. Here for the 1023, it's 600.
Mhm.
It has similar components. So for both, we will have the identifying information, uh, and you will need to attach the bylaws. Here, you will also have to have the uh, the biggest differences are that you will need to provide the description of purposes and activities, which is what we
Mhm.
call the part for narrative.
Mhm.
Later on, if you think that you will be filing the 1023, we will be able to help you draft one of those.
Mhm.
And you will also, in this case, need to provide financials. So you will need to provide a simple 3-year budget. They do not ask for too much information, but you'll need to provide some of the sources and some of the expenses that you anticipate. And
Yep.
then if you're certain programs like childcare, or if you anticipate that you'll be providing grants, or if you're a church, then you'll need to do some more attachments and provide bits of extra information for that part as well.
Right. And then attaching also your articles of incorporation and your
Yes.
bylaws. Yeah. Yeah, and we can help you with both of these forms. In fact, we can, in fact, Teresa, after this session's over in about 5 minutes, we will take a little break, as we said. And then if anybody is ready to do the 1023 EZ, she will actually walk you through the form so that you're ready to file it yourself. Whereas the full form 1023, what we tend to help you with is the narrative. That's the most challenging part. And that's something we can get started on today, but we probably need another meeting with you to finish it up. Okay. But of course, all of this is free from us. Yeah. Let's skip this one. This is more sort of how you break up the information between the articles and your application. And the main thing is just they need more information in the application. The articles are more like you pick your purpose and then give a couple of examples of activities that are going to further the purpose. But you put things like hours and eligibility requirements and things like that. You put that in the full form 1023. Let me tell you a little bit about these check the box portions. They're really kind of annoying. And yes, you have to do these with the full form 1023. I'll just give you the highlights here. Yeah, conflicts of interest. They're really touchy about that. That's where you have to have that conflict of interest policy. You have to have this stuff about setting salaries, board compensation committees, and things like that. Oh, Alma, could you mute yourself? That'd be helpful. Thank you. Um, then you'd want to describe your services to individuals or services to organizations, a few other things. Oh, yes, they ask you about bingo and raffles because some people go a little crazy on those. They want to know if you're going to use a paid fundraiser. They want to know, are you going to be working in foreign countries? Just lots of different things they want to ask about to get more details. Now, here's an example of what they might want to ask about, or what information they might want to know. Operating in foreign countries. Okay, no, the IRS isn't xenophobic or anything. They would just want more information. Okay, so what is a good example of this is, let's say you wanted to save the rainforests. That's a charitable activity, by the way. Environmental stuff always falls into the charitable activities. Okay. Let's say you want to save the rainforest. You want to do a bunch of planting of native trees and stuff to make the rainforest, thrive and everything like that. Okay. What they want to see you do in the foreign countries is basically, if you want to pass out some money there, okay, that's fine, but do it in a way that doesn't leave a lot of discretion. Okay. So instead, what you do is you'd call up a forester in the rainforest and say, I want to plant, 500 trees. Here's the money. Okay. That's the way they want you to do it. If you wanted instead to give it to a nonprofit in Brazil, a Brazilian nonprofit to do the planting, yeah, then they're going to have a little more information they need from you. They need affidavits from the board members of that nonprofit that, yes, we're going to use the money, but only for these charitable purposes. You have to be able to audit their financials to make sure that they did it, all kinds of extra stuff like that. So the basic idea is yes to foreign activities, but less discretion to foreign actors. Hey, Alma, if you could put your mute on, that would be good. Thank you. Okay, finally, a few things on the financials. We got your income statement. You got that's more like income versus expenses for the 3-year period. And then you also have a balance sheet. The balance sheet is essentially what do you have in the bank right now. So, just make sure everything adds up and you don't, it's better to be a little bit conservative in what you're saying. Again, they're not going to hold you to this if, 2 years down the way or something like that. Okay, now this is a very important part, and it's a little complicated, but we'll break it down for you. Okay, there are two ways that the IRS recognizes nonprofit organizations. One is as a public charity, and the other is as a private foundation. Okay, you want to be a public charity. Why? Because they regulate private foundations very heavily. Okay, think of a private foundation as like the Gates Family Foundation. Okay, and you can sort of get a sense of why they want to regulate them more carefully because all the money is coming from the Gates family. Okay, it's not from a diverse set of, donations and grants and other things. It's all coming from the Gateses. And the Gateses control all of the revenue, who's going to get money, who's not going to get money. And so the IRS says, well, hey, private foundation, if you want this tax exemption, then you're going to have to do a few things like agree to audits and agree to distribute some of your money every year and things like that, not just sitting on it. So it's a lot more regulation that you don't want to do. Okay. So instead, you can be a public charity if you match to one of two descriptions. Okay. You can be either a 509A1 public charity, which simply means that you're getting support from grants, government, and individual contributions, donors, and things like that. Okay. Maybe that describes what you're doing. By the way, more diverse than the Gates Foundation. Okay, so that's why the IRS will say, oh, yeah, you get a diverse amount of support from all these sources. Yeah, we won't regulate you quite as much. The only difference with a 509A2 is that you also have income that you're earning related to your activities. So, for example, a daycare center might say, yes, we do charge tuition for our daycare. Okay, well, there you go. But we also do contributions. We also do grants. Yes, yes. So what we're saying is you should choose one of these two and do not choose the private foundation. I've had to correct this with a couple of organizations that checked the wrong box, and it's not fun to change this. So just remember 509A1 or 509A2, you'll be fine. Okay. The last thing to just say is that the IRS gets a little touchy about some of these areas here. As I said, foreign countries, they want a little bit more fiscal oversight there. Anytime there's a conflict of interest with somebody in your leadership, they want it well documented, and that person should not be, making decisions. They should be recusing themselves from the votes and things like that. You could do some commercial activity, but the primary purpose must be exempt. What am I talking about? Let's say Planned Parenthood is a nonprofit. Yeah, they do commercial activities by selling condoms and birth control because it's part of their mission. If they're also selling on the side, candy bars or stuff, no, they shouldn't be doing that sort of stuff. Okay. In fact, they'll pay unrelated business tax on the candy bars or anything else they're selling. Okay, t-shirts, things like that. All right. So, and we can help you describe these activities carefully so that the IRS will likely approve them. Okay. All right. So, Tracy, you want to tell us about this other form, the 1024A? We'll just preview that a little bit for them. That's for the 1024s, or that's for the 501c4. Yeah.
Yeah. So as we mentioned in the beginning, the 1023 or 1023 easy forms will apply if you're one of the 501(c)(3) exempt organizations. However, if your organization is interested in doing um, some lobbying and some political activity, you'll want to be classified as a 501(c)(4) organization. And in this case, you will fill out the 1024A form. Similarly to the previous ones, it does have, your identifying information and organizational structure. In this case, you'll also want to provide a description of purposes and activities. The difference here is that they will want to focus on uh, your political activity being not being the main activity. You're allowed to do a political activity, but it should not be the main purpose of the organization. You should
Mhm.
be still doing something else as your main purpose and doing political activities only less than about a half of the time.
Mhm.
Similarly to the 1023 form, you'll want to put some assurances about your activities and financials, so an estimate of a 3-year budget.
Mhm.
And same as previously, you'll want to attach your articles and bylaws.
Mhm. Yeah. And there's a few other things in the 1024A to note about. We have a little chart here that Teresa did that helps
Yeah.
characterize that.
So as I mentioned, the focus in the narratives is slightly different. In the full 1023 form, you'll be wanting to demonstrate that you're exclusively operating for the charitable, educational, or religious or other 501(c)(3) purposes. Meanwhile, in 1024A, you will want to demonstrate that the purpose
Mhm.
of is primarily promoting social
Mhm.
welfare and community benefits, and that
Mhm.
you know there's the primary activity test, so that you're primarily focusing on these activities and doing any political activity as a minority.
Mhm.
Uh, you in both of those you will describe your activities and how they further your exam purposes. In
Mhm.
the 1024A, you will also want to describe slightly the
Mhm.
percentage of time spent on each of these. Again, because there
Mhm.
are different tests.
Mhm.
In one, you're exclusively organized or exclusively pursuing the purpose. In the other one, you just need to show really well that
Mhm.
you're primarily promoting social welfare and community benefits as
Mhm.
opposed to political activity.
Good. And then there's a little check the box stuff here. Same sort of thing as the other, is there a membership? Are there property that you own? A few other things that they want to know about. They also want to see a conflict of interest policy, of course. So,
Yeah.
all right. Well, I think we got pretty much everything we wanted to tell you about here. I think it's time to go for some questions if we have any. Alan, are there any questions in the chat?
Just one, but that's been answered already, so I don't think there was
Okay.
any.
Well, anybody want to unmute yourself and ask a question? That's fine too. Go ahead. Anybody? Mm-mm-mm. Okay. You can always, by the way, you can always set up an appointment with us. Let's just give you the share screen here. Wait a minute. Where am I going here? Share screen. Yeah, just the last slide here. Yeah, if you want to get in touch with us, I would say to contact us at admin@newbusinesslaw.org. That way we can set up an office hour with you. Or you can go just directly to the website and sign up for an office hour slot there. We also have Facebook and Instagram and TikTok, I think, too. So, there are a number of ways to get in touch with us on stuff. But what we're going to do now is we're going to take a 5-minute break. We're going to thank you all for coming. But we're going to say if any of you want to work on one of these tax exempt applications, or the 1023 EZ, go over that one, or the 1023 full form, or even the 1024A, we'll stay after and work with you individually on that. If not, then just go ahead and take this good information that we gave you here, and feel free to contact us and set up an office hour when you're ready to either form a nonprofit corporation, set up a sponsorship arrangement, or to go ahead and file for tax exemption. By the way, tax exempt applications these days, 1023 is probably getting done back to you probably within about 8 weeks, maybe 6 weeks. And then maybe more like 8 to 10 weeks for the full form and the 1024. Yeah. Okay, well, good. Well, any other questions before we break? Okay. What we'll do is, yeah, if you want to stick around afterward to do any of these forms, or if you have, another question you want to ask us, feel free to come back. But it's 6:01 right now. Why don't we take a break and we'll, oh, wait a minute. Is there something new in the questions here? Hold on. Do you see something? No, no.
No, there has been just a request for the
Oh, you got the
links.
resource drive. Okay, good, good. Okay, so it's 6:01 now. Why don't we come back? Oh, 6:02. Why don't we come back at 6:07? And if anybody is here ready to work on some of this stuff, just, stick around afterward. We'll turn off our cameras and audio right now, but we'll be back at 6:07. And if I don't see you otherwise, thanks for coming. Anytime you want to work on this, just give us an email. Again, it's admin@newbusinesslaw.org. Okay. All right, we'll see you guys. Good luck with everything. Let us know if you'd like to help.
Thank you.